Hello, today is the 10th of May. Let's start our weekly preview of the markets, and we will, as always, try to figure out what's happening and what's about to happen and what could potentially be actionable here. Previously, I mentioned that macroeconomic releases are not that important right now because they are being heavily discounted by the fog of war, which is hanging over the markets right now. Obviously, we're talking about Iran, and as long as the core commodity of the global economy, the main energy source, price stays volatile, stays dependent on political interventions, on the outcome of the war between Iran and the States, you can basically discount almost everything with the exception of inflation. And this is exactly what we are going to see next week on Tuesday. So that is important. Why it is important? It's important because it will be considered by the Federal Reserve as one of the core determinants of their policy. And let's remember that Federal Reserve is probably the most important force in the market right now, so their rate decision will be crucial. And of course, they were pretty cautious about this whole oil situation because higher oil prices lead to higher prices overall, and that means inflation. So that's why they are sort of cautious. They are in the wait and see mode. And if we will get a negative surprise here, that could be perceived by the market quite badly. So, and we will see in a moment why that could be supported by technicals that we see here. So let's, as always, start with Bitcoin and Ethereum and the rest of the quote-unquote new finance space, as I like to call it. Why start with Bitcoin? Well, because it's in my opinion, it's the most responsive asset in the world right now. It's liquid, but it's not too liquid. It's efficient, but not too efficient, and it trades 24/7. So when something happens or is about to happen, Bitcoin is usually the first one to respond, and the rest of the space as well. So what we're seeing here now is it's near a major reference point, and it's not bullish so far. It's that 200-day moving average, and it's clearly in a decline. And it's a very important reference. It is quite unlikely. In markets, everything is possible, but we still have probabilities, and the probability of it just slicing through the declining 200-day moving average is quite likely, and quite low. I'm sorry. And what's most likely is volatility around it. And it's actually happening right now. When I was starting my review, it was good, and when I was in the middle of my study, it sort of became suppressed a bit, and now it's strong again. So volatility here is almost a given, especially if we take into consideration this week, and from a technical standpoint, this could be an area where resistance for Bitcoin will be quite noticeable, and it's an area of 82,000 to 83, maybe 83 and a half. And Ethereum is lagging. The only chance for Ethereum to catch up here is to see Bitcoin dominance to fall, and maybe we will see this trend reversing. This is ETH BTC. So far, it's in a downtrend, but it's at support at the same level. So in case we will see bullish things in the market, maybe some settlement with Iran, Ethereum has good chances of catching up with Bitcoin, but personally I don't think that it's the primary scenario right now. Overall, the market stays at a very the market is very difficult. That's the correct way to put it. It's definitely a choppy environment, but it's chopping to the upside, and it is actually rewarding quote-unquote bad behaviors. Only two types of traders thrive in this kind of markets. The first type is are real pros who can distinguish one market regime from another, and in chop we're supposed to sell strength and buy weakness, while in trending markets we're supposed to buy strength and sell weakness because the trend is there. So this is the first category of traders who know that. And the second category is just dabblers, people who average down, who buy the dip no matter what, and they are rewarded by this kind of market. And unfortunately, most of them, maybe even all of them, will be punished when conditions eventually change and when the market will be in bear mode again. So apart from that, what could I mention? I could mention hyperliquid, potentially setting up here for a breakout. Looks nice. I don't like these wicks here. Obviously, it should be closing at the upper part of daily range, but once again, we are in a chop market. So those who sell strength earn, those who buy weakness earn money as well, and those who expect a traditional swing trade breakout, they suffer because they get stuck here. And if the market will sell off, maybe being triggered by this technical stuff, or maybe by higher inflation, these longs will be liquidated. Their stops will be triggered, and or they will just sit with the drawdown maybe for some time. Maybe it could go down here, undercut, or maybe meet resistance support here. But at the same time, it looks interesting, and it's notable. It's one of the best themes in this market right now. The centralized exchange, the quiet revolution of finance of these days. So it's definitely worth keeping at your radar. What else? We also see strength in meme coins, namely in GIGGLE. And it actually looks actionable here. Sorry for redundant wording, but it could have a relief rally to this declining 200-day moving average, and the numbers are there. It's like almost 50% to get there, but you gotta manage risks to trade such stuff. What else? SUI is breaking out. Here it is, and trying to pierce the declining 200-day moving average, and this could be the preview of what is about to happen with Bitcoin here. So it's having its moment with this huge volume, and you shouldn't be surprised with that because these names are inherently volatile. But it's getting some resistance here. So Bitcoin saw something like that here, and right now we should see how things will unfold in this area. What else? There was a nice breakout in Zcash. Like it's I don't remember exactly, did I point it out in my previous videos, but it was here. This was the base, the bottoming base, and this was the breakout. that worked quite well. So privacy is big. Privacy is definitely one of the themes for the next rally in coin, and I think it stays largely intact. What else? Let's go to the world of stocks. The first thing to mention here is that all indices are extended. Everything is extended, and that means that breakouts could face some resistance should they happen. Should they happen soon? My indices. Here are they. So this is a classic V-shaped, a rare classic, or maybe it's not that rare anymore because we are starting to see these V-shaped recoveries more often. They are extremely difficult to get on. Once again, they are for pros and for fools who buy stuff without thinking twice, without risk management. And this reminds me of that meme a bit, where the distribution curve displays obviously a very smart person, an average person, and a very dumb person, and what the smartest person does also does the fool. So the difference is in money management. Obviously, those who know what they're doing will be cashing out, and the fools will maybe ride this wave for a little, for some time, and eventually they will pay the price, provide liquidity to professionals. So obviously everything is very extended, and apart from Dow Jones, divergence between indices is a cautionary sign, and we could also see that volatility is catching support here, so maybe it's about to bounce back, and that could coincide with, once again, maybe inflation data or maybe some escalation in the war, because as I'm recording this, we are getting another barrage of news regarding Iran, and Donald Trump doesn't like what Iran says about the end of the war. The terms are not acceptable. What else? I like to see that copper is on the move, because this was one of my official ideas, and the whole premise of this idea is that electrification electric infrastructure will be one of the most obvious responses to this whole energy crisis, and it doesn't matter that much which electricity will flow through the network. Will it be generated by solar or by sun or by nuclear? Humanity, developed countries, leading countries like the States will definitely be heavily invested in renovation of their electric infrastructure, because they will be getting off oil fast. So that's why copper is on the move. Copper is being used basically everywhere in electric industry, so nice to see these ideas starting to work. Here, what else? Another cautionary tale is this 10-year yield, which is about to break out of this long consolidation. It's not a horizontal line, so it's not that bad, but still it's a giant flag, so to speak, and breakout from this consolidation looks almost imminent, and that could mean that long-term concerns about the economy of the States is there, and the money are positioning accordingly. And here I can also immediately, since we are talking about the economy of the States, I can point out this breakout in emerging index fund. This breakout is from a very long consolidation. The weeklies, here are the weeklies. and very long consolidation. So it could be as powerful as breakout in gold. So what does this mean? Coupled with the supposed concerns about health of the economy of the states, that could mean that money will flow to emerging economies, and actually it is happening already. It was confirmed there was a pullback. Now it's being confirmed by raising to new highs, and this is important. This is an important observation, and it's actionable on its own. What else could we add to the bucket of our concerns? Well, first of all, leading stocks such as SanDisk are starting to look below off topish. That means that it is becoming extended. We did not see extreme volume yet, but I think it could come soon, or at least there will be a pause here, like it happened here in November 25 and later in February 26. Another below off topish behavior is from Micron, once again getting extended. Even this is really below. This does really look as a blow off top, because the extreme volume is here, and also it's like it gained 15% on Friday. So we could even see extension of that tomorrow with such power. But this is usually the time when smart money distribute their shares. So this is a very significant cautionary sign. Same with Intel here. What else? I like these nice consolidations and breakouts in Australian dollar and maybe British pound. That's about to reveal itself here, and that is good for these currencies. But obviously the market is betting on weaker dollar in the coming months and maybe even beyond that, because these consolidations are significant. They are quite long, and yeah, a good situation to notice and maybe to even act on. What else? Another cautionary sign: weakness in banks, triggered by the report of Wells Fargo, or what? Which report was that? Oh no, I'm wrong. Reports were happened before that, and weakness in banks is almost a very potent sign of concern about the economy, and maybe even the first sign of correction. It would be too easy, though, to see a uniform market behavior, because space stocks are extremely strong. Like everything in this space, looks really nice. A very powerful bounce on Friday, and there are lots of beautiful price pictures there. The question is obviously as follows: if the market pullback is about to present itself, will it be enough to suppress this action? Because these names are pricing in upcoming SpaceX IPO, and SpaceX IPO will be the biggest thing probably to happen to the economy and to the markets, because it will create not just a new sector, not just a new group of stocks. It will create the whole new economy, where the sky is literally the limit. And by saying that, I mean that it's going to be limitless, and it will potentially create tremendous economic activity. And you can see the outline of these the outline of the structure of this economy here. So obviously it's space communications, like ASTS, EchoStar, Viasat, York Space Systems. Then it's Earth observation. Looks really nice here. And of course, it's launch infrastructure and space infrastructure. So it's Firefly Aerospace. It's Intuitive Machines, obviously one of the first name and one of the most known names in this industry. Redwire and Rocket Lab that had a spectacular breakout on Friday. So this is interesting. You're obviously starting to get a sense of how bifurcated this market is. On one hand, we have strength in innovation, in AI, and in space, and at the same time, we're seeing a number of maybe excessive exuberance behaviors in the market, namely in semiconductor stocks, and obviously weakness in finance is never good for the economy. Another thing to mention is that South Korea EDF is very strong, and it was one of it was another official idea, so nice to see it working. Obviously, at this point, it's very prudent to trim and maybe to take some profits because it's becoming extended in another example of blow-off topish movement here. SOLV Energy. Full cycle solar company, another idea that is working really nice. So and I think Kulamagi would like this setup, and it for those who trade in his manner, this could be actionable here. Who knows, maybe betting for blow off top, or maybe for a very positive reaction to these earnings that are about to be presented on Tuesday this week. But at the same time, it's countered by another cautionary behavior. So Solstice Advanced Materials was consolidation I was watching, but here it just failed, and this bearish engulfing doesn't look so good. So at the very least, it needs more time, but this doesn't look so good here. What else? What could I mention here? So I was watching a number of nuclear names, because nuclear is another obvious beneficiary of this energy transformation, which will be triggered by the Iran war. But it had a good start, but at the same time it was suppressed on Friday quite a bit. The space took some hits, and it doesn't necessarily mean that it is over, because in my opinion, atomic energy and uranium is being supported by two very important factors right now. So the demand from AI data centers is still there, and that was the thing that created this powerful rally in uranium in in April 25 and up to October 25. So now the data centers are still there, and on top of that we have like a general demand for electric energy, and atomic energy is one of the most obvious and easily scalable that's not right. One of the most obvious and potentially easily scalable solution to the energy problem. The only thing it needs is the technology update, because the basics are there, but something tells me that these big atomic stations are vulnerable. In some aspects, they are like little straits of Hormuz that could be captured, attacked, disabled, sabotaged, thus creating potential ecological disaster, and political and economical as well. And the most logical answer to that is making them, firstly, less powerful, more compact, safer, and distributed. This way, the risks will be largely countered, and AUD Energy, one of the recent IPOs in this sector, is probably the most important stock right now, because they are designing this kind of a new reactor. So right now it's building its IPO base, and who knows, maybe it will do something similar to what MWH did, because despite being different companies, this one is solar energy and this one is nuclear energy. They are both alternative energy companies. Obviously different, but still same. And once this consolidation is completed, I think we could see a very nice rally in this name as well, and even proliferation of such names in the months and years to come. So this is very important. And finally, new names and potential ideas for the next week. As you could see that the number of bearish indicators in this market is a bit higher than the number of bullish indicators. So among those bearish indicators are some technicals, starting with Bitcoin declining 2200 day moving average. In indexes, it's extension from moving averages. In current leaders like Micron and SanDisk and Intel, it's extension, and it starts to look more like blow off top moves, where institutions distribute and excited retail provides liquidity. Banks are weak, and what else? And uranium took a hit on Friday. So in my opinion, that outweighs strong space stocks, but obviously the strength in some of them is very remarkable. Oh, and obviously Korea, because it's tied to these AI supply chain stocks, is blow off topish as well. So that's why I'm cautious, and that's why I kind of understand what could be interesting here in this inverse PLTR ETF, inverse ETF to short, basically short Palantir. Looks nice, not perfect, but potentially actionable here as a breakout or a breakdown in the original stock. The other name that is interesting here, and I think it needs some time too, because it's at resistance, is this name, NAVN. This is a corporate bleisure. I don't know what to think about this word, but it's a mix of business and leisure. Company that helps companies conduct business travel. So very nice EPS, very nice surprise in that regard, and an interesting name in an interesting industry, because I think it sounds fresh, and obviously the volume is here and accumulation continues, but it could need some time here before it eventually breaks out of this consolidation. And that consolidation could obviously be triggered by a pullback in the markets. What else? And emerging index I did already mention. So that's it for this week. Overall perception of the market is cautious. Difficult market since maybe the beginning of this year. Still rising, but gotta be ready to control the risk. Bye.